I'm Monika Tamber, Director of Security Governance at Payments Canada. We'll start off with a discussion and we'll save some time at the end to answer your questions. So please use the Ask the Speaker box on the right-hand side of your screen to submit any questions. Your video and camera have been disabled, so best to submit your questions in that box. Before we get started, let's do a round of introductions. Peter, let's start with you.
Thanks, Monika. Good morning, folks. It's a real pleasure and honor to be on this panel today with my peers from Moneris and Interac, and of course, a fabulous moderator from Payments Canada. My name is Peter Dodic. I'm the Chief Risk Officer at Payments Canada. For those of you that are not aware, our organization owns and operates Canada's national payment clearing and settlement infrastructure. As CRO, I lead the enterprise risk function. I'm also privileged to lead the internal audit and compliance functions, and I've been here for almost 4 years now. In a former life, I worked for a large Canadian bank for 15 years, and before that, I was an engineer. Thanks for having me on, Monika.
Peter, over to you, Mario.
Good morning, everyone. Thank you for having me today. I'm looking forward to the discussion. Mario Falvo, I'm the Chief Risk Officer for Interac Corp. My portfolio at Interac, similar to my colleagues here, includes our risk management function, internal audit, and I'm also responsible for managing the ongoing requirements of our prominent payment system designation with the Bank of Canada. For those of you that don't know who we are, Interac operates the Interac e-transfer service, along with other payment systems such as debit and the ABM infrastructures. We're also offering digital ID services within the public and private sectors through our subsidiary 2Keys and the acquisition of the rights to Secure Key digital ID services for Canada. Very happy to be here today and to have this opportunity to discuss proactive risk management with my respected peers.
Thank you. Brian, tell us a little bit about yourself.
Sure. Thanks, Monika. And thanks, Peter, for inviting me to be on the panel today. I'm Brian Prentice. My pronouns are he and him, and I'm the CRO at Moneris Solutions, which is Canada's largest debit and credit payment processor. I've been at Moneris for 16 years and in the CRO function for around 10. Our function runs the enterprise risk management group at Moneris. We also manage the credit and fraud risk at our company. Exciting times in payments and lots of risks to be managed. I work with the rest of the executive team at Moneris in managing the risks that we face in this dynamic market. Prior to coming to Moneris, I was with RBC for about 16 years in various risk and commercial banking roles.
Wow, so much expertise in one room. I'm so glad you all could join us. Let's start with our first question. How has your risk outlook changed in the last 2 years? What has your organization learned about your ability to respond to a crisis? So Brian, let's start with you.
Sure. The past 2 years have been a great illustration of how uncertain our world really is. Despite our natural desire to have stability and predictability on a very regular basis, we see events happening that seem unlikely but have very high impact. And certainly the pandemic that we've just been through is a great illustration of that. It's tough to spend management time thinking about low probability but high impact events when there's always these much higher likely events that everybody is trying to face. But I think the pandemic is a great example of how spending some time proactively thinking about these low impact events can really help organizations deal with them in an effective and cost effective way when they happen. So having some time to prep for these uncertain events is an important thing, and the outlook in having foresight and looking about this is really important. In terms of our ability to respond in a crisis, a couple of things. I think what's happened in the last couple of years has been a fantastic illustration of how when people come together and focus on an issue, great things can happen. I think, the response in getting vaccines done, and how most organizations moved from where we were in March of 2020 at the beginning of the month to a couple months later to being in a fully virtual world was tremendous. We seemed to not miss a beat when we were all focusing on that. So in the everyday, we've got lots of balls to juggle and things get dropped. This was a great example of focus and determination and really coming together as organizations and as a society to deal with that. So I think it was a tremendous response that we had and most organizations had. The other observation I'll make is just when there is uncertainty, we tend to skew to risk-averse stances. And it's hard in the face of that uncertainty. And so when we think about planning for that and understanding what governments and others will do, I think it's this is a good observation to say it's likely that people are going to take a risk-averse stance when these things happen, when uncertainty becomes certain and the outlook becomes very unknown, and you're treading a new territory. People will take a very risk-averse stance in most cases. So,
yeah, no, I think it's really good points about uncertainty. The last 2 years have taught us so much about, things scenarios that we didn't think were going to happen, and we're in a crisis situation. Over to you, Peter. What are your thoughts?
Yeah, thanks, Monika. I'm glad Brian went first there. That was a great answer. Maybe I can add a little bit around the margins. Just start with some context. Similar to Brian, my sense is that the global pandemic really revealed how much the world can move forward when it wants to or when it needs to, right? In this case, to adapt to a global crisis. And, not to minimize human cost, but we've seen profound changes in technology and in business and in human behavior, right? For example, look at things like the adoption of digital solutions, right? Experts have been saying for the last year or so that we've seen, years of advancement condensed into a really short time, really like a warp speed evolution in tech adoption. And, bringing it to payments, I think Canadians are becoming more comfortable with things like easy and effective cashless payments. I don't think cash will be king in Canada going forward, and payment innovation will continue to gain momentum. Especially with things like the RTR going live next summer. And, all these big changes, of course, will change our risk outlook, right? We're going to have some risks that are reduced, and we're going to have some new ones. So as our risk environment changes, of course, we're going to have to change our risk practices. So you asked a little bit about risk outlook, Monika. I would say we now have a much bigger focus on operational resiliency. I think in the past, my financial industry colleagues, myself included, have looked at things like business continuity or vendor risk or infosec or fraud or technology in some detail, probably a lot of detail, but maybe as separate silos rather than as a holistic framework. So I think through COVID and through this experience the last 2 years, I think we've seen a bit in real time how interdependent and interconnected all these things are. And I think we need to think of risk holistically and understand kind of end-to-end impacts, not just kind of one piece of the pie as it goes sequentially. And if I could add a last thought around discovery and learning over the last couple of years, was really around resiliency for us at Payments Canada, about our people and about our systems. Our systems performed incredibly. In a total work from home environment, we went cold turkey March 13th, 2020, and it was amazing that we really didn't miss a beat. And the folks that run those systems are fantastic. Our operations folks at Payments Canada did yeoman's work. And I think it's remarkable how our people adapted to huge amounts of change, and just to see their capacity to be resilient in the face of all the things that were happening at home and elsewhere was really extraordinary. So that's it for me. Maybe Mario can add a bit to that, Monika.
Yeah, I know, Peter, really great points. I think it was a forced digital transformation that's happened that I don't know if everybody was ready for. And I really loved resiliency. I think that's been the key term, right, for the last 2 years. Over to you, Mario. What can you add?
Yeah, thanks, Monika. So for me, the past 2 years have really shown not just the potential of individuals and businesses when it comes to resiliency, but but I think more important, agility. So the most recognizable and I guess commonly discussed proof points on this are the shift from work to work from home that we saw at the onset of the pandemic, and the pivoting of many businesses in terms of their product service offering or even how they were operating themselves. Payments, of course, a key enabler for these shifts, which certainly required all of our organizations to adapt and be able to support those changes that were taking place. So the speed with which these happen really still astonishes me today as a risk professional. It gives me incredible optimism about our ability to identify and respond to risk. I think the pandemic has shown the power and importance of both strong risk culture and risk management generally. We needed to navigate all those twists and turns that we've seen through the last 2.5 years, whether we're updating our office setups and policies to comply with the health orders, or developing new remote working strategies, employee policies around that, changing our own business practices to support remote working, dealing with personnel shortages, supply chain issues, really risk management considerations and decisions throughout all of these, and likely no playbook. So for me, it's great to see how we relied on risk principles, guided by our risk culture, to work through all of these different things. And when we're able to do this and do it effectively, it's really a clear sign that risk management has been sufficiently embedded such that we can apply it naturally to a situation like this. So I think for all of us, some really good takeaways in terms of how risk plays a role in events like this, whether it be one time or ongoing in nature, and really being able to build off of that.
Yeah, no, excellent points about agility. And I think this is a really good segue, Mario, what you said, to our next question. Risk mitigation is often seen as a reactive business. What are some proactive ways to prevent risk, especially when it comes to safeguarding large-scale payment infrastructure? Peter, let's start with you.
Thanks, Monika. So that's a big question. Let me start with some context here, right? Payments Canada is an FMI, so the context is safety and soundness is at the center of all that we do here, right? We do this while taking into account interests of course, our members and regulators and stakeholders. But as a first principle, our organization, has to consider risk appetite when it takes on risks, right? And I think Brian mentioned it a few minutes ago. This is not an exercise in risk avoidance, right? We knowingly take on risks, and that's fine, that's okay. But we knowingly take on risks that we understand and that we can mitigate while following that safety and soundness mandate. So given that mandate, right, which is a very important piece of the puzzle, to ensure proactive risk management, I think you have to ensure that your organization has the right foundation, right? And that includes fundamentals of risk management, like having the right frameworks in place, the right policies, the right tools to ensure that your risk owners can identify, assess, and monitor those risks, right? But beyond that, maybe most importantly, is you need the right risk culture in the organization, right? A risk culture that's thoroughly embedded in the business, with folks that are risk aware and folks that speak a common risk language. When you have that established, right, you can look at things like risk assessments. They're an important tool to understand how your risk profile may change when starting a new project, for example, or making a big decision, or bringing on a large new vendor, right? Beyond those tools, I think a final component of being proactive is around ensuring that you're monitoring and reporting your organization's risks, be it top risks, be it emerging risks. And I might even argue that this transparent reporting maybe even be at the root of being proactive, right? I can put my hand on my heart and say that business leaders and executives and our board and our members are all aware of my top and emerging risks, right? I'm proud to say that we have a mature process with the financial industry. We share risk insights, we share metrics, we share perspectives. We meet all the time, and every quarter these folks see my detailed risk report and get real insights into our firm. And I know that the colleagues on this panel and elsewhere would agree that risk isn't a place that's competitive. When it comes to payments, we're all better off when we share our risk insights and risk knowledge. We're better able to manage risks when we share that knowledge. And I think that's a big part about being proactive. Thanks, Monika.
Yeah, no, great points. I heard frameworks, tools, and collaboration, transparency. Mario, what are your thoughts?
Yeah, thanks, Monika. Definitely agree with what Peter just said. I think two of the most useful and proactive tools and risks that I'm going to spend a few minutes talking about today are first one being an emerging risk framework, and then the second one was scenario planning. So on the emerging risk framework, that's really there to support early detection and analysis of triggers that could lead to risks or opportunities for your business. So I think it's important to call out that while we might refer to it, and others do as well, as an emerging risk framework, it equally serves and should be used to identify opportunities as well. As an emerging risk isn't fully understood and therefore can't be properly assessed, it's important to have a separate framework to manage these before they turn into real risks, or alternatively, to develop a strategy to capitalize on them if they represent an opportunity for your business. I think partnering with other business units in your organization, like your strategy team, regulatory, legal, government affairs, and communications, is key to develop the scanning that you need to identify the signals and the trends and the drivers of both risks and opportunities. And then the framework's really there to help you identify and evaluate the possible options for managing the risk or capitalizing on the opportunity. So those can range from acting on a factor that contributes to the risk emerging, developing a precautionary approach to it, modifying your risk appetite in line with the new risk that might be coming, or perhaps doing nothing and simply monitoring it for now. So the other tool on scenario planning, I think within both the emerging risk framework, it can be used, but also with respect to known risks to our businesses. So we use scenario analysis to examine and evaluate possible events that could take place and then predict what the feasible results or possible outcomes could be. The outcomes, Peter spoke to risk appetite. We then consider those against or relative to our risk appetite to determine if new or different risk mitigation plans or controls are needed. And if you have an integrated scenario analysis such that you're looking across functional areas, risk categories, both financial and non-financial, that's going to provide great insight and information on the key vulnerabilities of your organization and resilience to potential stress events. So this will enable management to undertake more proactive actions and then further build that resilience that we talked about earlier to both the financial and the non-financial events. And when you combine those two, that view helps in really thinking about response, which needs to be layered. So regardless of the tools you use, I think the important thing is that management and the risk owners need to be critically involved in these processes. These are never exercises that the risk function undertakes in isolation. So we're there to support, but we really need those in the front line, the first line, to be at the heart of a lot of this.
Yeah, and I couldn't agree with you more. Working in security myself, I agree. It's all about partnerships, integration, and everybody coming together to have that risk culture across the organization. So, Brian, over to you. What are your thoughts?
Great points made by Peter and Mario there. I'll add a couple of things. I think the first point around risk mitigation being a reactive item, I'll challenge that and say I don't believe that good risk mitigation is reactive at all. I think it is proactive, and that's part of making quality decisions in general, is that you need to be able to evaluate alternatives and come up with what the best strategy is for managing it. If you're reactive, you're really limited to short-term thinking, reaction to something, and decisions that can be implemented quickly. So I think good risk mitigation strategies are forward-thinking, thoughtful approaches to the risks that can be occurring and making those decisions with a forward-looking view. And both Peter and Mario, mentioned that scenario planning and forward viewing. So I totally agree with that. When we're thinking about large scale payment infrastructure, you really do have to have a thoughtful view about what's coming down the pipe, what can be coming, and building and architecting that to be resilient and secure. And adaptable to changes that are going to be happening. So the second point that I'll make that I don't think any of my colleagues mentioned was really adoption of standards, and they help with best practices and that thoughtful approach about what will work. And it also helps if you're in managing those risks. And if for whatever reason people say, well, we need to make an exception to this, or this isn't the normal thing, at least it points out that there should be more eyes on that situation. So whether these are NIST or ISO standards or other standards that help organize thinking about best practices in a thoughtful way and approach, that's another way to really adopt those, and then focus on the things that really don't fit. And if it does fit, then you can be reasonably assured that you've got a thoughtful approach on doing it. So the last point is really that preventing risk is usually not the goal. You just have to make risk aware decisions and cost effectively manage the risk, as opposed to a goal of preventing. We can't prevent risk. It's like uncertainty is going to be there. We have to acknowledge that, live with it, and make appropriate decisions with transparent conversations about what the risks are that we face.
Yeah, I love what you said. About the standards. You have to create expectations and rules and monitor what are the exceptions, and there's never zero risk. We're always going to have risk, right? So this takes us into risk culture. So when I think about building a great risk culture, I think about how important it is to strike a balance between delivering efficiency while protecting your business and consumers. So how do we strike that right balance in the payment modernization space? And I'll start with you, Mario.
Yeah, thanks, Monika. I love this question. So we have a short video that's embedded in one of our enterprise risk management awareness decks, and it emphasizes the importance to our business of addressing risk in the right way. And I recently had the opportunity to deliver a presentation on our risk program to all Interac employees, and there was 3 key messages in there that are really important, and I wanted to start off by emphasizing here. So the first is that there's a world of opportunity out there. So your risk management program has to allow your organization to capitalize on those opportunities. So as Brian just said, it's not only about preventing risk. We're never going to be able to prevent all of that. The second is to embrace risk to stay ahead. In order to grow and thrive, we have to take risks. I think Peter said this before. This is why we express the amount of risk that we're willing to take in pursuit of our strategy through our risk appetite. And then finally, risk management really enables us to move faster and act decisively. So I use the analogy that risk management is like brakes on a race car. So you might think that means the risk program needs to be there to slow things down, which is absolutely not the case. But just as brakes on the race car are there to give the driver comfort that they can drive faster, risk management needs to allow the organization to operate and act more swiftly, not slow things down. With respect to risk culture, the importance of a strong risk culture, it can't be overstated. So as it makes the difference between risk management being natural and being mechanical. So what I mean by that, as it relates to risk culture, is that really drives what we say, what we think, how we act with respect to risk management. If the culture is strong, those behaviors become embedded in how we undertake what we're responsible for in our specific roles, including risk management activities. The starting point is really about clearly defining the roles and the responsibilities and the expectations for risk within individual positions. Adopting the 3 lines, we mentioned this earlier, it's a useful step towards this, but you really have to take it a step further so that employees can tailor what they're accountable for and their role within each line. So at Interac, my risk team is helping to strengthen the risk culture by first assessing that culture that we have and then developing some tangible action plans to address any gaps that we perceive to be impacting it. So we did this by, we actually administered a risk culture survey to all of our employees. The survey consists of 6 statements that we asked employees to respond to, which we felt would provide a good indication of the culture. And a key finding from that was that while many are knowledgeable about role-specific risks and openly discuss those within their team, there's an opportunity for senior management and the risk team to help employees understand how risk management can support strategy achievement. So it's important for employees to know why they perform their risk management activities within their roles, and then more specifically, how they support the achievement of that strategy. Going back to what I said earlier about what risk culture drives relative to risk management, what we think, say, and how we act. If these are well understood by employees, then it's easier for employees to balance risk mitigation and efficiency in what they do. Knowing they're making a risk decision, understanding the appetite for risk is really going to allow them to make an informed decision that they're comfortable with. And the last point on the 3 lines of defense and risk culture goes back to my comments on the first question about our ability to respond to a crisis. So if your employees understand their role in risk, your culture is strong, it isn't going to matter whether you have discrete plans to guide you through new risk scenarios that emerge. Employees will be able to navigate those on their own without having to stop and wait for guidance to be developed.
No, great points, Mario. And I think it's you hit the nail on the head that we don't have to think about risk as slowing things down, right? We're trying to meet that strategic objective, and how do we help? So over to you, Brian. What are your thoughts?
I loved your race car analogy, Mario. I've used that as well, and I think it's very appropriate. Obviously, you can't go fast safely unless you've got some brakes. And we all, as our organizations in a dynamic environment, we're trying to move quickly and seize opportunities. I totally agree with the premise around a strong risk framework and culture has to enable success in modern payments. I think that consumers and merchants have very simple asks of payment systems. You want reliability, you want security, you want it to be fast, you want it to be relatively low cost in terms of time and dollars, and that results in a value proposition for every participant in that system. So these concepts are simple, but they're not easy to implement in a real world. So I think if any one of those propositions isn't in place, you're at risk in terms of your organization or your payment system of not being successful. So the risk management to make all of those core principles or value propositions come to life needs to be in place, and that enables the organization to be successful. But you can't avoid risk at all costs, and you can't have so much cost in trying to take risk away that your value proposition's gone. So I think risk management's all about reducing uncertainty in a way that's cost effective. So I think strong risk frameworks and cultures where people have good conversations about it and come up with the right ideas and strategies for managing it is so important to success. The one area that I don't think Mario spoke explicitly about, which I will, although we're talking about laying a foundation, I really think that the support has to come from the very top of the organization and the tone at the top. If that's not there, if the CEO is not supportive of an effective risk management program, you're kind of dead in the water. Luckily at my organization, I've worked for 2 CEOs and they've both had a great support and understanding of the need for good risk management. And that's really the foundation. It starts from there. And then Mario spoke a lot about training and education for every employee, but making sure that everybody in the organization knows that they have a role in managing risk for the organization. Whatever job somebody's doing, they have a role in managing risk, whether it's reputational risk, dealing with customers, delivering that value proposition day by day. Everybody's got a risk management role to play.
Yeah, no, thank you. Top down and roles and responsibilities. I think really great points that kind of build on what Mario has said. Over to you, Peter. What are your thoughts?
Yeah, thanks, Monika. I think Mario and Brian kind of said it all. I'll just kind of echo that last point from Brian because I think it's really critical around having senior leadership and executive support for your risk function and making risk a priority. We're lucky here at Payments Canada that our CEO and our ELT really get risk and understand its function and its place. And when it's a focus and it's a priority, it's really sustainable, and you can get that culture embedded because it's going to be here for the long term and it's not going away. So that's really big. Thanks, Brian, for bringing that up. Just to go back to some fundamental thoughts. I mentioned before, effective risk frameworks, effective tools. Those are just kind of the foundation and the fundamentals to support meeting objectives, be it risk or be it business, right? So I think of those as like base skills, like learning how to skate, learning how to shoot if you're playing hockey, right? You have those basics in place, then you can begin that journey on risk culture. And in my experience, that's a journey of 1,000 steps. That takes a long time. That's not done in a month or a week or a year. That's a multi-year endeavor with many mindful and thoughtful steps along the way to keep it alive. And in my experience, that means a focus on embedding common expectations. That's around a focus on knowledge and on attitudes, behaviors, right? Really building an understanding of risk with folks throughout the organization. And by embedding that culture, which I think is just like the ultimate key, it really ensures that your owners, the risk owners, right, have that awareness, have that knowledge and experience to manage and mitigate, not only across your organization, but across the industry where required, right? So that right culture allows you to approach, for example, a new payment product with the right lens, right? We mentioned earlier, not around risk avoidance, but it's a lens of understanding, and it's a lens of making sound business choices that are risk informed. If that means pumping the brakes sometimes, that's great. If that means pumping the brakes to go to a corner, to go fast out of the corner, even better, right? But it's about having optionality and making sound business choices. And let's bring it back to our mandate, right? We're an FMI, we're critical infrastructure. So we have this duty to provide safe and sound and efficient systems, right? And that to me means fundamentally just having the right risk culture in place to understand the different risks associated with what we're doing with our systems, with evolving tech, and really how we help mitigate those with support from our partners, our members, and our regulators. Thanks, Monika.
Yeah, no, great points, Peter. And I like what you said about priority, and it's kind of a great segue into our last question. Before I get into that, I will say it's great to see the audience engagement, and I do see your questions, and we will be jumping into them after this last question. So our last question focuses on collaboration. How can we collectively make sure risk management is a priority that cascades not only across our organization, but also at the payments ecosystem level? So I'll start with you, Peter.
Yeah, that's a great question. So a couple of things you asked about there, a bit of a macro and a micro perspective. Like I mentioned, I think earlier, if you want to proactively mitigate risk within an ecosystem in this broad sphere, I think it's critical to share information in a timely fashion, right? No surprises. We have to ensure that we're all risk aware. And at the risk of repeating myself, in an interconnected environment like we are in payments, we're all linked to some degree. No one benefits or has a competitive advantage when it comes to risk management, right? Looking at the micro, if I look at my organization for a second, I think I mentioned earlier, it goes without saying that risk culture is the key, right? And it's built and matured through having this defined program, and it's integrated throughout the firm, and it's sustainable with smart and risk-aware staff. And then, having that risk culture, Mario mentioned having effective structures like 3 lines of defense. That's all about enabling risk owners to better understand their responsibilities, right? And it is a responsibility to manage their risk, right? It's an accountability. And the job of my team really is to match that energy that the business has and really build those frameworks and tools to empower business folks to manage that risk, right? So that's the kind of meeting in the middle that we do. We don't lead it, but we definitely support it. And there's a challenge on risk leaders like ourselves, right? We have to be effective communicators. We have to be effective leaders, and we have to understand business needs and business issues. So it's not so much about being just the risk person, not so much about being just the break person. It's about being both a risk and business person, understanding both perspectives, and trying to find that happy middle ground. One final thought, just around having a well-defined and embedded risk appetite, right? That might be the final key here around culture, which is to really establish some guidance and help be a bit proactive, right? We want to set the kind of risk and the amount of risk that we're willing to pursue, we're willing to accept, and really set those guardrails for behavior. So if I was to sum it up, Monika, about being proactive, maybe at the macro level, it's about being transparent, and it's about sharing timely information with your partners. And maybe on a more micro level, it's around really embedding that culture and the tool set to empower your business folks to think like business people and risk people at the same time.
Yeah, no, Peter, that really resonates with me. I think, giving people that information that they need, giving that sort of risk and in our case, security, right, perspective so they can make decisions. And I really like that. You said transparency, educating people, having good communication, leadership skills. I think those are all excellent. Over to you, Mario.
Thanks, Monika. I actually I like the comments that I think the one I'd echo and take back to something Brian said at the top of the discussion around certain situations and folks being risk averse, and I think that's really our role in risk management to make sure that that doesn't happen. To look at our organizations, and we talked a little bit about risk culture and risk appetite, and that's what we should be using in those situations, right? So that we don't have people cowering in the corner because they're afraid that the risk is going to have too big of an impact. So from a risk standpoint, it's incredibly important that we make sure that we're always enabling the business and using the tools that we have. So I was going to talk a little bit about back to the 3 lines on this question. So, many organizations, including ourselves, has adopted the 3 lines of defense. When, I talked about our risk culture survey, one of the questions that we asked in there was, I understand the 3 lines of defense risk management model and how my role fits in it. And, for us, we only had 43% in the first iteration of that survey answer strongly agree or agree. So we knew that we had some work to do in making sure that all employees had an understanding of the model and its application at our organization. And most importantly, and my colleagues have touched on this, what their roles and responsibilities for risk management are in the broader ecosystem or their individual roles. So as part of that adoption, we took the time to classify our units within the organization in each of the 3 lines. So it was really clear where everyone fell. Then we looked at communication strategy to bring both the broad awareness of the 3 lines model and what it means, but also to make sure that each team knew what line they were in. And so that was really 2-pronged. We had a number of formal presentations on 3 lines, which are important, but I think beyond that, trying to embed that, mention of that in other forums within, the organization. So things like project meetings and team meetings with other business groups, one-on-one meetings, and then, finally partnering with learning and development to include an overview of the 3 lines in one of our ERM learning modules. So in my experience, many employees don't recognize that they have accountabilities related to risk management and actually make decisions in their role. And that's because they haven't really been explained to them in that way, and they aren't aware that certain activities are risk related. So once you set those clear expectations around the different roles and responsibilities with respect to risk across the organization and empower your employees to perform those like any other activity that they need to perform in their role, that cascade that we're looking for will end up happening. So, and that cascade is so important because risk management we can't be everywhere all the time, and we're not responsible for managing every risk. So we need to rely on our business partners in the organization, whether they're in a leadership role, whether they're in an individual contributor role, to be the ones that are on the ground that are having to do that day in and day out. And sharing of information, as was said, is also critically important. I know myself and Brian and Peter, we we meet, we talk, share what's going on. Like we've said, not a competitive advantage, right? The more that we can share and learn from each other, the better off we'll be, and the better the payments world will be at the end of the day, which is the goal.
Thank you, Mario. No, excellent points about education, and I love the one about the survey. Brian, over to you, and just keeping the time in mind, just a couple of minutes so we can take some audience questions. Please add your thoughts.
I'll be really brief, Monika. There are great points made. I think the one point I'll make around the ERM group, really trying to help create a knowledge sharing and continuous improvement culture. So not laying blame when things go wrong, but we want to understand and learn when things don't go according to plan or unexpected items happen, and encourage that open sharing. Again, not to lay blame, but to have the organization learn from it. And then other people will see what's happened and then have thoughtful conversation around how can they learn from this and perhaps put cost-effective controls or improve or mature, take a few more steps. So I think that's one of the most important things. The other elements that Peter and Mario elaborated on in terms of training, et cetera, I totally agree with. So I think it'd be great to get to some questions here from the audience. And I know that there are some in there. I don't know how many, but why don't we move to that?
Yeah, thank you so much. Great discussion so far. Yes, we have a few questions, and I'll go. I'll read the first one. What's the role of AI and digital tech have played to date, and what are your plans for the future? So I'll just open it up. Who would like to take this one first?
I'll go. I'll start some thoughts there. So AI and digital tech, new impressive solutions, right? And I think welcome additions to the tool set to support innovation. So big pieces there, and better tools, I think, from a risk perspective, because they can be used to increase automation, and that of course would decrease operational risk. From putting on my risk hat, there are challenges with those too. And really that's around getting the right expertise in your organization, particularly in the second line of defense. We need to have risk folks that understand things like AI and digital tech and those solutions that challenge the business. So it really puts the stress on organizations to get that expertise in the right places, to begin to understand the risks and to be risk aware. So welcome additions, but they have their challenges.
Brian, did you want to jump in?
Sure. I'd say for us, definition of AI and that between predictive analytics, I'd say we've been using predictive analytics and good modeling for quite a while. Started mostly in risk and fraud management, but starting to embed those into various products is a journey. In terms of pure AI or next generation AI, where the machines are kind of learning and going off by themselves and coming up with new things. I agree with Peter. We have to be fairly careful with that. Things we're thinking about, but how do you manage and govern that and develop the expertise within the organization to take steps with it? I think it's inevitable that steps need to be taken. That's the way the world is going, and it does unleash a lot of opportunity and risks, and we just need to be thoughtful about how we move forward with it. There's privacy and biases in models too, and so how you govern those is important.
Yeah, thank you, Mario. I'm going to give you the next question. The first to speak on that one. What are the major risks associated with innovation in your point of view? I would assume it is quite different than the traditional operational and delivery risks.
Thanks, Monika. This is a really good question. Yeah, definitely I would agree that when you look at innovation risk, certainly different than traditional risks like op and delivery that the person has asked about. I think one of the things I'll say is, certainly with innovation, it becomes much more nebulous, and a little bit more gray than the other areas, right? When you're talking about execution of your operations, when something's immediately going wrong, and the ways in which you're going to fix it. Whereas with innovation, it's a little less about that, and so you really have to open your mind a bit and be prepared, because with innovation, there's success and failure. From a traditional operational risk, we're trying to steer away from the failure, but with innovation, that's very different, right? You might need to move, fail fast, move quickly, and just make sure that your program, whatever you're applying from a risk management perspective, sort of takes that into consideration, because it is different from how you would manage those traditional risks.
Thank you so much, all of you, for sharing your expertise, and everybody that's tuned in. It was an excellent discussion, and I hope you have a great rest of your day.
Thank you.
Great. Thanks, everyone.
Be here. Thank you very much.